viewers, you're welcome yet to another edition of your program Business Matters. My name is Stephen Lawson. This is where we explore the height, the breadth, the length, and the depth of business. On Business Matter, we oftentimes take a topic that we want to dissect. And in this regard, we're looking at financial literacy as well as financial inclusion. But before we go into the depth of the conversation, please let's have our business update. On Business Matter, we invite a distinguished guest who comes into the studio to help us do justice to the topic of the day. And joining me, ladies and gentlemen, is a seasoned C-suite executive with over 15 years of strategic leadership experience across telecommunications, media, technology, and financial markets. He has a proven track record of translating business insights into actionable strategies that drive operational efficiency, optimize costs, and unlock sustainable revenue growth. He is the CEO Coronation Wealth. I'm talking about no other person than Mr. Olufemi Yoloye. How are you, Olufemi?
I'm very well, thank you.
Absolutely. We're looking at the topic driving financial inclusion in Nigeria, the role of financial literacy, technology, and innovation. And some of the things that comes to mind when we look at financial inclusion or financial literacy is the fact that is it an urban affair or a rural affair, or is it a combination of both?
Okay, so thank you. I believe personally it's a combination of both, and also from data in the business that we do. So let me put it in perspective. When you ask a typical Nigerian, why don't you invest? The standard thing is, oh, there's no money.
True.
Then you hear the cliche, I'm now on band A. Or you hear petrol used to be 185 naira, now it's 1,800. And then ultimately we sprinkle a bit of FX and say it's 1.4. But this year alone, how much was lost to the C Ponzi scheme, CBEX? How much?
Oh,
About 1.3 trillion.
A lot, man.
The entire mutual funds industry has roughly 1 million unit holders, and that figure has massive double counting, has 7.6 trillion, and has been growing for several years. So do we really say people don't invest because there's no money, or it's more of lack of knowledge, lack
True.
of experience, and then you sprinkle in a bit of greed? And it's across the board. In the past, in the 80s, it was the Wonder Banks. Today, you have different schemes.
Umana schemes, that
the
was
likes,
quite very popular.
Nospecto and co.
Nospecto and the rest of them.
Today, it's one helping others, MMM,
Yes.
CBEX type thing. So at the core, it is one of financial illiteracy. It's one of lack of exposure. Unfortunately, as a society, and fortunately as well, most of our financial knowledge comes from word of mouth. You hear Abiola was an accountant, and suddenly everybody wanted to read accounting in school and the likes. So all it takes is for one person to be a bad ambassador, and it percolates across the board. Maybe in rural area, it may be a different scheme. Bring money, buy rice, or maturity, you make something. In urban areas, it may be a bit more sophisticated, or some crypto type of investment. But at the core, it's lack of financial literacy.
It's a good thing you actually mentioned that, and you've talked about earlier on. I had a guest in one of the auditions that looked at fund managers behind different investment portfolio that you might have, and a lot of people don't realize that all of these opportunities are actually out there. And if you look at financial literacy programs in the country today, we don't seem to see a lot that can help to actually bridge the knowledge gap. Is that your own experience, or are there areas we're not looking at, especially when it has to do with financial literacy?
So it's a balance of both. The forerunners in terms of financial literacy have been the banks.
Okay.
So naturally, they spend time educating on savings. They spend time educating on keeping your account secure and the likes. investment and investment type products have not really benefited from an equal exposure.
Is that not an industry? Shouldn't that be an industry-led initiative?
The industry is trying. The industry is trying. There are multiple players. Today, there are about 778 capital market operators.
Wow.
This data from the SEX website is at August 31st. And about 930 different licenses from fund and portfolio managers down to solicitors.
That is quite a number.
It's a number. So, but that number, now when you have to compare to the number of banks, which is about 24. So when you have that kind of number, you may see a bit of fragmentation. You may see someone just doing niche play.
Okay.
Oh, I'm targeting this type of investment securities or this type of investment class, which is what you see today. I give it to the SEC. They are doing a lot, particularly this year. They were very big on Ponzi, from their name and shame schemes where they list on their website to financial advocacy in concert with IOSCO. So yes, the players will do it. The industry is doing it as well. But like I said, the banks have a head start. The different industry, particularly the banks, have a head start, and we are just catching up. Again, compared to banking, whereby the product is essentially savings. You just sell a rate. Everybody understands if I put 10K in the bank, I'll get 10 plus this. When you come into capital markets, there's a bit of diversification. You have mutual funds that give you almost that. You have equities where you can put 1 million and make 10 million, or put 1 million and come out with 500,000 naira and the like. So the sophistication is slightly a bit more, and the patience of the audience that we are targeting to is something we are consciously working on. The kind of returns that you get from Ponzi's is unmatched. It's unmatched. You know, there's an African proverb that says, if a man is hungry, let him go into the bush and kill an elephant. Either the elephant kills him and his hunger ends, or he kills the elephant and his hunger ends. So when you see someone with just his last 10,000 naira, he's probably thinking, let me go all in, you know, and the likes. Then couple that with what's going on in terms of gaming, and that's what we call sports gaming. And someone puts 500K, Club A to beat Club B, and then comes out with 2,000. That's what we are competing against. So it's going to be painful. It's going to be grinding, but together, as we continue to cure these education issues, we will see the value. So just some statistics.
Sure.
Year to date, the NGX is up about 45%.
Wow.
So meaning if you worked with an investor, picked select stocks, and you just invested on the 1st of January, today your money will be up 45%. Last year, I'm referencing the NGX ASI index. Last year was about 37%.
So that's a growth.
That's a growth year on year. And then there are some sectors that are doing way better, like consumer goods is up 77% and co.
Which other sectors?
So consumer goods is 77%. The insurance sector is up 61%.
Wow.
Pension, the Lotus, the Islamic sector, is up 78% as well. It's still not like putting 500 naira for Club A to beat Club B. But, you know, if you begin to teach people, you know, the cliche, time in the market is better than timing of the market. Put your 10,000, leave it for 2 years, see what is there, as against trying to put it in on Monday and bring it out on Friday.
But when it comes to issue of financial literacy,
yes.
It looks like a lot of people are more aware of treasury bills, even though they don't understand what that instrument actually entails.
Correct.
Can you help us to understand that better?
Okay, thank you very much.
Why would treasury bill be a better investment for me as against mutual funds or as against any other investment instruments in the market out there?
Good. So when you invest, about roughly, there are multiple parameters to look at, but 3 that come to mind is 1, your risk appetite.
Okay.
2 is your horizon. How long are you willing to invest? And then ultimately is your investment objective. So you have 1 million naira, your rent is 1.2, you need to pay by next month. Your goal is in 1 month, my 1 million must become 1.2. That's a goal. Your risk appetite. Sometimes all it takes is you have 1 million, you are looking at turning 1 million to 2. You don't mind if the 1 million becomes 800,
wow.
But you are looking at 1 to 2. So treasury bill is at the bottom of the risk. A government will never default in its own currency. You always just print more. As long as it's a naira bill, you just print more. So treasury bill is at the lowest point in terms of risk. Everything has risk, but it's at the lowest point. So what you see with most people is, I have 1 million, I want to invest 1 million. No matter what happens, I want to get back at least 1 million.
My 1 million
yes. Because again, you know, risk and return. because it's lower risk, it means the rates would relatively be lower than if you're putting it in a mutual fund or if you're using it to buy shares and the likes. Higher risk will give you higher
But
returns.
the tenor in all of this is obviously, are they biannual, are they monthly, or they're annual?
So in Nigeria today, there are fixed tenors for bills. So you hear of 91-day bills,
Okay.
you hear of 182-day bills, and then ultimately 1 year bill. By default, by definition, they are typically 1 year instruments. If it's longer than that, you begin to hear of bonds.
Okay,
And co.
okay,
So
okay.
the investor that goes into bills is one that is generally risk adverse. So bills, mutual funds, what you hear of the money market funds, are largely in the same bracket. But because money market funds will introduce a little bit of risk, you get a little bit more return in the run. But the investor that buys bills is one that wants to put 1 million in something and guarantee at least 1 million out. Whatever you give on top is grateful for it.
So which of the instruments in terms of investment, and this is all aspect of financial literacy, because I can
Yes.
tell you that I'm being educated financially now, that regardless of the fact that the risk may be higher, we're sure guaranteed of higher returns. What kind of investment options?
So it's to strike the balance. And what I tell everybody, like the firm I work, there's a team we call investment management team. All they do is track bond curves, track returns and the likes to ensure that you're getting the most return. It is not what a normal person can do in terms of the sophistication and the likes. Yeah?
You
So
know,
so
analyze
if you
all
try
that.
and if you try and go in alone,
Great.
you would always see that you'll be at a disadvantage to those guys. So with the bills, what is your investment goal? What are you trying to achieve? If it's just a general capital preservation, capital protection, then by all means just go and buy a bill off the shelf.
Yeah.
If you are looking for something like, I want to double my money in the next 2, 3, 4, 5 years, then you go for something that is a bit higher risk. When I say higher risk now, for example, a commercial paper behaves like a treasury bill,
Okay.
but will give you slightly better returns than a bill because it's issued by a corporate and not the government.
Okay.
Remember what I said again about time horizon. If you put money with a bank, you can remove it next day, and you're okay. When you buy an instrument like a bill, most times you have to wait till maturity. There's something they call repo, which will allow you discount it, yeah. But beyond that, so if for example you just have 1 week money, 2 weeks money, buying bills may not be the best for you. If you have 1 month money, your rent for next year, you have it now, you want to invest until next year, by all means, buy a bill, buy a commercial paper. So your risk appetite, are you okay with losing money? Your time horizon, and then ultimately your investment goal, all three combined. If you don't know what to do, talk to a financial planner, talk to a financial advisor.
Do we see a lot of Nigerians actually, subscribe to financial planners or advisors? Because it oftentimes, with a population of over 200 million,
Okay.
and realize that there's a statistics that says that Nigerians don't even have up to 500,000, or the numbers of Nigerians
Correct.
that have that much amount of money is far lower or higher, how do you want to put that, than those who have far beyond that threshold.
Correct.
Would you say that as it is, the general populace, in terms of being financially literate, are not aware of financial planners enough to even, subscribe to them?
So it's twofold. There's a pack that is not aware. There's another pack that is aware and they think it's out of their reach. So
Okay.
they just believe
Okay.
it is for the billionaires
Yes,
and the multimillionaires. So that's what tech platforms like ours are doing in terms of, and when I say ours, it's the entire industry. In democratizing access to these things. So today, using an app, what could be exclusive to only billionaires and millionaires, you can just punch in a few buttons and you get that. So it's awareness, is just prejudice or just opinion that no, it's only for the rich guys and the G-Wagon driving guys,
Anyway, listen, we're going to go on a short break. As
Okay.
soon as we are back, the conversation continues. Viewers, please stay tuned. This is getting more interesting as the fire in the studio is getting hotter. So if you've just joined us, this is Business Matters. My name is Stephen Ipalobo Lawson. I'm in the studio with Mr. Olufemi Yoloye, a seasoned C-suite executive. I've been looking at the issues of financial literacy. Where are those areas that we are not looking into that we must be aware of? And I can tell you, Femi, I've been very, very educated, as a matter of fact. And I know that we had several questions that we were going to focus on, but it looks as if the conversation has taken a totally different, tangent. And I think it's very good because our listeners are actually looking at where they want to put in their money to make sure that their money has certain returns that can guarantee them wealth. Because wealth is of different degrees. People want to be able to have enough to be able to say, okay, I want to own a home. I want to be able to have enough funds to take care of our children's education and all that. And all of this make up the circle or circumference, you might want to say, of financial literacy. However, when you look at issues like endowment fund for education, insurance, pension, a lot of us are not very much aware of how this operates. Perhaps it's a good thing we have you in the studio to help us throw more light to this issue of, okay, I want my children to be able to have good education, so the funds must be available. What kind of instruments are available out there in the market? If it's in terms of pension, do I get the opportunity of, if my pension doesn't mature to the point where I can take it midway, what are the penalties and all that? So that's one of the areas I'd like you to help us with.
So let me break it down again in three distinct buckets. One is generating wealth, which is what we've spoken to largely around investing and the likes. Two is preserving wealth. And then the third bit is transferring wealth.
Oh, great. Yeah. Generating wealth, preserving wealth, and then transferring wealth.
So now, what is preserving wealth? You've taken 20 million, you've bought a fantastic car. You want to ensure that you never have to buy that car again if anything happens. You insure it. You have a home, you've bought a flat screen TV, you've bought this, bought that. You want to ensure that no matter what happens, you don't have to buy those things again. You insure it. So that's generally preserving your wealth. Transferring wealth is where we come to things like wills and co. But even as part of preserving wealth, you have what we call trusts, education trusts. Most people assume that all these things are after the person's demise. No. Today, you can set up an education trust for your kids. That all you do is fund it. How it is administered in your presence or in your absence is completely taken care of by the trust. They will guide you on the best way to set it up in such a way that it is tax efficient. They will guide you in a way to set it up in such a way that your wife can run it, your kids can run it. You can put clauses that guarantee that something will be unlocked until a particular age and the likes. So you can do all of those. Beyond preserving wealth, which is where insurance comes in, life insurance, things like annuity products and general insurance, the car example.
Forgive me for interjecting. When you talk about the trust,
yes.
Is it an instrument meant only for the rich?
Okay.
So what category of people can actually have trust to make sure that their children's educations are oftentimes taken care of?
So it's one of those things that people assume is for the rich. Yes, you pay your trust manager. But at the core, anybody, if you earn a monthly salary, you can have a trust. You can sit down with any trustee in the Nigerian capital market. They will sit down and do the basic financial planning for you. How much do you earn? How much do you spend? What are your goals with respect to what quality of education do you have? You want them to have? They run some numbers. They give you a rough idea. You need to contribute this amount into the trust monthly. School fees will be paid from the trust. You give all the necessary mandates. So again, it's one of those things that we all think is for the super rich, but any and everybody can benefit from it. Again, with digital tools, we're having digital wills today, where those big forms that you have to be moving around, a few buttons, you're there. It's still a relatively complex product. So you can't do everything digitally. There's a bit that you start digitally and then you go offline. But it's one of those things that if you earn a salary today, if you have a family and you feed, you can sit down with a trust advisor and come up with a basic trust. It's going to be different from someone who has a house in US and has this and is trying to do all of that. But any and everybody can set up a trust that would meet your family needs.
Oh, yes, that's great. So continue with your
trust. And then the last point is on transferring wealth. Maybe this one I should even be speaking to the men now. I should be speaking to the women to hold their husbands to ensure that everybody, there's a morbidity to these things.
Yes, but Femi, why do people think that it's the man that goes first? I mean, these are some of the things that it's always the man who seems to carry the brunt of all of this.
Statistically, life expectancy for men, yeah. But a few buttons, a few clicks will save the family a lot of problems down the line. in terms of just setting up a simple will. This is what I have your assets listed. This is what I want to go, and you can always update it. It's never too late. This is what I have. This is how I want it to be distributed. It will save, and then, you know, there's a joke we crack, particularly with insurance. We say in Nigeria the competition to insurance is blood of Jesus, because
Yeah, that's true. Because everybody talks about
everybody
it,
just
blood of
assumes
Jesus. Yeah, it's something
yeah,
morbid or negative.
it's
but
negative. But in
It's
actual sense,
uncertainty. I mean, it's what life is part of, as a matter of fact.
it's part of it. So in the same vein, set up a will, meet with a trust advisor. They will guide you on what lawyers to use and the likes. It's one of those things again that we all think is for the very rich, but it's available at every price point. List your assets, have your testament, who gets what, how should it be distributed, and that's it. The husband will have it, the wife will have it. Can be updated 1,000,001 times, and we move on with that regard. Those simple things is the reason why you hear Mr. A was a billionaire in his time. He died, the wealth went 50 ways, and then nobody remembers the family name anymore. They had a company inside, things around that. So
That's wealth not preserved
who
at
has
all.
wealth not preserved at all, wealth not transferred from
Transferred, pardon me.
generations. Yes, if we look at the US, you have the Waltons, you have generational wealth, the Hiltons and the likes. In Nigeria, second generation, by the time you start to get to third generation, it has kind of diluted.
Okay, as a way to wrap up this, and I hope that we will have so much in terms of this conversation we're going to revisit again.
Okay.
Financial literacy entails what, and what do the average Nigerian needs to look at for him to consider himself financially literate?
Okay. So in a nutshell, it will be knowledge of the financial products, how they work, what's the underlying risk, and all of that. And then the person himself should be empowered enough to take the financial decisions. I have 1,000 naira. What do I know? When someone comes and tells me buy XYZ share, do I know what a share is? Come and buy commodity. Do I know what that is? Gold is the best performing commodity this year. Do I know that I can buy gold in Nigeria on an exchange? All those things are financial literacy. Beyond that, the very dangerous part is when someone walks up to you and say, give me 10,000 and I'll give you 50,000 by Friday. Do I know that that's a Ponzi? Am I sensible? Am I enlightened enough to know that, that's what financial literacy is? So knowledge of the financial instruments, how they work, and then ultimately being empowered to take the right decisions.
All right, thank you so very much, Mr. Femi Yoloye, for being with us on this particular edition. I hope in the future, when we extend an invitation, you will help us with that.
God willing. Thank you so much. It's been a
All right,
pleasure.
viewers, this is so much we can take on the interview segment. Stay tuned. After the short break, Business Matters continues. As you've seen, it's important for us to be financially literate. A lot of us think we are financially literate. Meanwhile, we do not know so much about the financial space. And this is part of the reasons why this program is being held, for us to address a lot of this knowledge gap. Unfortunately, this is so much we can bring to you on this week's edition of the program, Business Matters. My name remains Stephen Lawson. Until I come your way again, bye-bye for now.